Hi everyone, welcome back to this series of professional trading secrets. In this video, I promise to share with you more trading secrets. I hope you enjoyed my first and second video. Let's do a quick recap. So in the first video, I taught you how to read the language of the market, and I stressed the importance about understanding and reading the language of the market to gain an winning edge. And in the second video, I talk about how two key factors drives the market, and that is greed and fear. And traders who are able to understand how greed and fear drives the dynamic on the market will have an edge over other traders. I also talk about two key indicators, and they are price and volume. And I said that the price should be read from the perspective of supply and demand. And volume is like the energy that drives prices. Volume gives us conviction. And if price and volume are read alone, they can be weak. But if you are able to put price and volume together, they can be a very powerful combination. If you haven't watched lesson 1 and 2, I strongly encourage you to go back and watch it first, because this lesson built on what we have discussed in the previous lessons. Today's lesson is going to be exciting. I will review the 3 must-know strategy to gain a trading edge. The first technique is horizontal support and resistance. Sometimes I refer it to natural support and resistance because of the way the horizontal support and resistance is drawn, and it is natural to the human eyes. So what is support and resistance? Support and resistance levels are important points in time where the forces of supply and demand meets. Areas where prices has reacted in the past and potentially react again in the future. So let's start with support. Support level is generally regarded as a point where prices stop falling and starts to bounce up. And if this same price action continues to repeat, what you will get is a support line, and that's a line where prices kept bouncing off when it touches it. So how do we see it from a supply-demand perspective? With more supply, the price drives down until a point of equilibrium, and as more demands now comes in, it drives the price up. So what about resistance? Resistance is the exact opposite of supply. Right, it is generally regarded as a level where prices stop rising and start dipping back. And when this price action repeats, you get a resistance line. And how do we see it from supply demand perspective? So with increasing demand, prices start moving up, it hits an equilibrium point, it turns down where there is increased supply. So how do we identify our support and resistance? We identify them through joining the swing points. So in this case, prices were heading up, stopped rising, it turned, and therefore it forms a swing. When this price action continues to repeat itself, it forms 3 swing points, and by joining the 3 swing points, you now get the resistance line. Similarly, as price falls and rebounds upwards, it forms a swing point at the bottom, and when the price action repeats itself, what you have now is drawing the swing points or joining the 3 swing points together to get a support line. So why do we use support and resistance? Support is a price level where the downtrend can be expected to pause due to demand or buying interest, and resistance is a price where an uptrend can be expected to pause due to supply or selling interest. And if you are able to correctly identify support and resistance, it is a potential source of trading opportunity. So how do we use support levels? Support levels are best used by identifying historical price action from the price chart. And when you identify, for example here, 3 swing points, you draw a support line by joining the 3 swing point. And when price starts to dip again towards the support line, there are 2 scenarios. And the first scenario is the price will rebound from the support line. The second scenario is that the price will break the support. And in both these scenarios, it presents a trading opportunity. So how do we use resistance level? So first of all, we have to identify the swing point on the chart. And once you have identified the swing points, draw a line, and that will form the resistance levels. And when prices start bouncing off again towards the resistance level, there are only 2 options. One is that the price will break above the resistance levels, and the second option is that the price will now dip below the resistance level again, and that will provide us with possible trading opportunity. So in this example, we see price consolidating between support and resistance, and when demands overwhelm supply, the prices now breaks above the resistance line, forms another resistance, and the former resistance now became a support. And this process repeats itself in the uptrend, and traders can take advantage of this opportunity to profit from the market. So now let's talk about breakouts. When price breaks above resistance, that resistance now becomes support, as it is now below the price. When price breaks below support, that support now becomes resistance, as it is now above the price. So let me use this example to show how support resistance line is drawn. So from this chart, we have identified 3 swing points. So all you have to do is to join these 3 swing points together to get a resistance lines. And then when price went back down below after hitting resistance, it forms a support, and we identify the support with these 3 swing points, join them together to form a support line. And when prices start bouncing off from this support line, it forms another swing point, which is now lower than the previous resistance, and now it forms another intermediate resistance lines. The prices broke above the intermediate resistance lines and went for the previous resistance line, which now becomes the new resistance. It hits there and it bounces back down again, and the previous resistance line, which is in the middle, now becomes the support line. So here we could see how resistance and support is drawn, and how we could use or how support can become resistance and resistance can become support. Sometimes trading support and resistance in real life may not be so straightforward. So here you see an example where there are multiple rejections, and these swing points are not exactly at the same level. So when it is not exactly at the same level, you want to draw a resistance line on a best fit basis. So you try to fit them as close or as near as possible. So after the price rejection, you could see all the price retreating, and there you form another series of swing points. And so here again, there are swing points you can use to draw the support levels. They are not very clear, and a lot of them are not at the same levels. So what you would do is that you want to find as many swing points that sits on the same level, and when the support line touches the most swing point, that would be the most valid support line. Let me demonstrate. So here you see that I drew the support line to cut across as many swing points as possible. So let's start from the left. So I hit the first swing point here. Look at my cursor. Second swing point, third swing point right here, and this is the fourth swing point. And after the fourth swing point, we got finally the fifth swing point. So when we look at this whole support line, this could be the most credible because it is only on this line that the most swing points are hit. In real life, many times support and resistance lines are not very obvious. As a professional trader, we have to look within the chart, within the price action for a valid support resistance lines. And so what is the criteria for a valid support resistance line? The criteria for a valid support line is one line that touches as many swing points as possible. In this case, the support line is drawn close to the bottom. It is not at the bottom, but it hits as many swing points as possible. So support resistance lines can sometimes be drawn right at the top. It can be found right at the top. Sometimes it can be found right at the bottom. Sometimes it could be even found in the middle. So the test for a valid support or resistance line is one that touches the most swing point. So what are the important points of support resistance? So first of all, we must remember that support or resistance is not a specific line. It could be just an area. So don't trade immediately. Observe price action. After the level is tested, then you trade them. So if you want to be buying off a support, you don't want to buy at the point where prices hit the support line. You want the price to bounce off, before you take the trade. Support and resistance line drawn from a higher time frame tend to be more significant, or if I may say, more stable. And that is because prices on a lower time frame chart tend to be more volatile, and if I may say, more unstable, and thereby giving more false signal, like a false breakdown from a support or a false breakout from the resistance. Alright, we come to our technique number 2, and that is market trends. So why do market trends? It is a function of price. Remember, in our lesson 2, we said that price should be read from the perspective of supply and demand. And therefore, the function of price is governed by supply and demand. So when supply and demand is equal, prices tend to move sideways or horizontally. And when demand overwhelms supply, prices tend to move upwards. And when supply is more than the demand, prices tend to move down. So why is trend trading, or being able to identify the trend correctly, so important? It is because if you are able to identify the trend, especially say an uptrend, you can allow your profit to run by just sitting on the trend. And if you get the trend wrong, the trend suddenly turn against you, you could cut your losses early. So what is a market trend? It is perceived tendency of price to move in a particular direction over a period of time. So there are three main types of trend. One is an uptrend, the other is a sideways trend, and the other is a downtrend. So why study trends? We have often heard of this cliche, the trend is your friend until it bends. So when you take a trade in the direction of the trend, you have a better chance of winning the trade even if your timing is not perfect. When prices break the trend, it could signify the start of a reversal, and there is a potential for a big counter trend trade. So for example, if you know that this stock is on an uptrend, you got excited and you bought this stock at the high, the stock corrected, and you did not sell it because you believe that the prices will come back because it is on an uptrend, and true enough, the price turned around, went back up again, and the trend saved you from a big loss this time. So in this example, so what I'm trying to show you here is that if you are able to identify the uptrend and when the trend changes, or you can spot when the trend changes, it could allow you to ride your profits, and you could even turn into a short if you know that it is a downtrend, and thereby taking a big win. So what are the methods for trend analysis? I would like to highlight 3 key methods. 1, moving average. 2, pivot points. And the 3rd, trend lines. So first of all, let's use the moving average as an illustration. So in this illustration, I'm using the 5 and 20 times moving average. Alright, so most of the time when I use moving average strategy, I would try to use a multiple of 4 or more. Alright, so in this case, the short-term moving average is 5 and the long-term moving average is 20. So this is 5 time moving average in blue and the 20 time moving average in green. And when the short-term moving average, which is the 5 time moving average, crosses the long-term moving average, it is a buy signal, and vice versa. When the short-term moving average in blue cuts the long-term moving average in greens from the top, it is a sell signal. Alright, so first of all, let's look at the first sell signal that came here, and you could see that on a 5 to 20 simple moving average crossover strategy, it actually throws out many buy and sell signal. As we move to a higher time frame chart, you could see that now we have less buy and sell signals. In fact, if you count the buy and sell signals in the total trading cycle here, all right, which is from 2016 all the way to 2019, perhaps there is about 17 buy and sell signal. So let's move up the time frame again. So in this case, we are using a 50 and 200 day moving average, and let's see how many buy and sell signals do we get, all right, from a 50 and 200 day moving average. So we have the first buy signal here, all right, in 2016, in the first quarter 2016, and then we have a sell signal here right at the third quarter of 2018. So it's about 2 years in between the buy and sell signal, and subsequently, all right, we had the next buy signal that occurred in the 2019, and that lasted for a couple of months. So you could see that now there's a huge difference, all right, in the buy and sell signal as you moved up the time frame, all right, in the moving average. So let's use now even higher time frame moving average, and in this case is 100 days and 400 day moving average on Nasdaq. All of us know that the tech stocks has been the best performing stocks in the last 11 years, and Nasdaq has been enjoying the longest bull run in history. So here we could see that in the course of the last 30 years history, all right, Nasdaq, right, or if you use the 100 to 400 day moving average, you would only need to sell once here, all right, and this is a signal that's been triggered, all right, during the internet.com bust, all right. So this is the .com bust. We have a sell signal right here in the year of 2000, all right. So 2000, late 2000, we had a sell signal on the Nasdaq, all right, and we didn't have a buy signal until 2004. And after 2004, all right, we had the next sell signal, which is during the great financial crisis in 2009. And after the 2009 financial crisis, 1 year later, all right, we had a buy signal. And ever since until today, we never had a sell signal. So if you had used the 100 and 400 day moving average on Nasdaq, which is on a 11-year very well defined bull run, you never had to sell after you bought, all right, the Nasdaq index in 2009. All right, and you could have sat on the index until today and there is still no sell signal. All right, so what is the lesson learned for us? All right, so the lesson learned for us for using moving average for trend analysis is that the shorter pairs result in more trades, but smaller profit and smaller losses. The longer pairs result in less trade, but bigger profits and bigger losses. So what is it for you? All right, what should you be using? All right, find one that suits your trading style and risk appetite. So what am I trying to say here? What I'm trying to say here is this, all right, if you are unable to take a lot of risk, you are unable to take a lot of losses, you will have no choice but to trade the lower time frame moving average. But if you have deep pockets, all right, and you can take more losses, you could now choose the longer term moving average for your trading. So what is the drawback, all right, between, or advantages and disadvantages between trading the shorter term and the longer term moving average? The shorter term time frame, like I said, all right, is rather volatile and unstable, and therefore it will create a more false signal. All right, and if you use the longer time frame moving average, it is more stable and it creates less false signal, and thereby because it is less volatile, you have less anxiety, all right, trading this longer term moving average. All right, we have come to our second method to identify trend analysis, and that is by using pivot points. So from a naked chart, what you have to identify really is all the swing points. And if the swing points are making lower highs, like in this case on the left, and lower lows, all right, so this is a downtrend. And on the right hand side, when the swing points are making higher highs and higher lows, that will be the uptrend. And when the swing points sort of level off, all right, that will be that the market has gone into a ranging mode. All right, so let me demonstrate. So in this case, you could see all the swing points on my left, they are lower highs, and when the prices turn around, all the swing points became higher highs and higher lows. So when you see lower highs and lower lows, the market is on a downtrend. And when you see higher highs, all right, and higher lows, the market tend to be on a uptrend. So this is a very simple method of just looking at swing points or the pivot points, all right, to gauge whether the market is on an up or down trend. All right, so on the left here we have the lower highs and lower lows, and therefore it is a downtrend. And on the right we have higher highs and higher lows, and therefore the market is on an uptrend. And then from an uptrend, the trend changes, and we could see the swing points or the pivot points leveling off, and therefore we got here a ranging trend or trend in consolidation. And after the trend went to consolidation, we went finally into a downtrend. All right, so let's look at the chart again. On the left, it was on a downtrend, and when the trend starts making new highs, or when the pivot points start making higher lows and higher highs, now it signifies a trend reversal from a bearish trend to a bullish trend. And here similarly, when the trend changed from higher highs and higher low to lower highs and lower low, it became a downtrend. All right, so now we come to our third and final trend analysis method, and that is using trend lines. So trend lines is an extension of the pivot trend analysis method. And the reason is because trend line is drawn by connecting as many pivot points as possible. So in this case, I try to connect all the pivot points, which is lower lows, and I formed now a downtrend line. But when you see the price breaking out of the downtrend, there is a possibility the downtrend could have been halted or paused, and ensuing uptrend is about to begin in this scenario. But surely not all prices that breaks a downtrend turns into an uptrend. So there is still a good chance that this whole uptrend movement may not materialize. It could the uptrend or the breakout, could happen. The price could go into a consolidation mode, and the downtrend could resume again. But when a prices breaks above a downtrend, traders now must be alerted, all right, to the possibility that there is a good chance now that the trend could have changed. So now you repeat the whole process again when you see the downtrend changes now into an uptrend. So what you do really is to identify all the swing points, all the pivot points, all right, and to join the pivot points, as many pivot points as possible. And in this case, we could visualize an uptrend line here by connecting all the pivot points. And when the minute, right, the price breaks below the uptrend line, you don't want to be too bullish. All right, you want to be taking your profits or even turning into shorts. All right, and in this case, we could see that the uptrend now turned into a downtrend. So let's use another example for trend analysis. So in this case, let's use Apple. And on the left-hand side of the price action, we could see Apple doing higher lows and higher highs. So what we did really is to repeat the whole process again, all right, to be joining the pivot points on the best fit basis. All right, so I stress best fit because all the pivot points may not be in line. All right, so we want to draw the uptrend line on the best fit basis. And here we saw the uptrend broke and the uptrend turned to become a downtrend. And similarly, the way to do it is to be drawing or to joining all the pivot points. And after a downtrend, clearly we have a price breakout above the downtrend again, and the downtrend now turned into an uptrend. And after this uptrend broke down, and the downtrend lasted for a very brief period, you could see that. All right, and then we have another breakout, but here the downtrend did not continue. The downtrend sort of turned around to become another uptrend, and here after the uptrend we had another trend breakdown. So we come to our third technique. So to recap, our first technique was about horizontal support and resistance, and I taught you how to profit from being able to identify support levels and resistance levels. So what you want to do always is to be buying at support and selling at resistance, or selling at resistance and buying at support. And the second method is about being able to identify the trend. So it is very important to be able to identify the trend, and in the market there are only three trends. It's either uptrend, downtrend, or sideways trends. And I taught you many methods how to identify trends. Okay, so now we come to the third technique, and that is volume and price. So can you imagine you can even find support and resistance with volumes? So let's recap, all right, the importance about volume. So volume is the energy behind the stock movement, and when you have enough volume energy, it gives you good conviction about how the market moves or how the stock moves. So in this example, we have price and volume history dating all the way back for about 1.5 years. So on the left, I have marked out 4 very significant price and volume distribution, and this price and volume distribution will form the support and resistance of this stock. So let me explain. All right, so when I say, or I marked out, or I've identified, all right, the significant price and volume distribution, what it really means is that historically at these prices there were a lot of volume traded at this range of the price. All right, so because there was so much or so significantly higher number of volume traded for this stock at these prices, they now become significant. So when do they become significant? They become significant when prices breaks below or breaks above that level. All right, so like I said, this level now becomes a support and resistance. So in this case, right, at the current price, it's just broke, all right, below the 2 resistance level, and therefore if you are using this method to find volume or to find support, all right, you would be looking at the support 1, which is about 310, all right, to be the first support. All right, so this is an area on the first support, all right, which historically have attracted huge buy volume. So using this method, now you assume, all right, that at this level, all right, it was similar. If it goes back to this level again, it could similarly attract the same type of buying interest. All right, so that's how you look at it. But what if, all right, what if you know, the stock rebound? Okay, so the first scenario here is the stock could rebound, and if the stock rebound, resistance 1 at this volume distribution at around 370 will be your resistance. And if the support 1 cannot hold, and if it breaks, right, it goes to the next price volume level or distribution level, which is the most significant, because in the course of the 1 year, this is the highest volume at price ever done. All right, so at this level we could see more support, all right, coming, or we could expect more support. All right, so this is how or this is a very simple way of finding support and resistance using price at volume. In the first example, the volume at price was in a zone, but in this example, the volume at price is broken down into every single level. So in this example, it is about this stock OSIM, and you could see that there are only 3 significant volume at price level, and that is 151, 169, and 175. And this data is collected between 1st of June 2015 to 21st of July. So about a year data. All right, and let's look at the chart. All right. So this is the chart of OSIM, and if you have just taken the price at volume and if you have drawn it, all right, so you could see very clearly that the 3 levels actually came into play: the 175, 169, and 151. So the prices move in a very consolidated zone, all right, resisted at 175. When the prices could not break 175 after many attempts, it broke down, it became weaker, even breaking down below the next support level and at 169. But observe, all right, after it broke 169, when it came back again or it rebounded, it was resisted at 169, and therefore the 169 level now became significant. And then the prices went back down again, all right, because the stock is rather weak. It went down. When it broke, all right, the 151 mark. Similarly, when it rebounded, all right, it was only resisted at 151. So if you are able to derive this support and resistance level from the volume at price chart, right, you will be able to know exactly when to buy and when to sell. So now I want to show you how I've used this technique that I've shown you today to profit from the market. As a professional trader for the last 15 years, trading the Hang Seng Index, trading the China A50, and trading the Simsky has been almost my daily routine. All right, so here I want to show you an example of how I made almost $20,000 just using this very simple trade plan. So this is a trade plan on the Hang Seng Index, and it is a 1-minute chart trade plan, which means every bar here represents only a very short 1 minute. So let me just explain how I made those monies. All right, so Hang Seng was on a downtrend, but it did a rebound, and I was targeting it here, all right, to hit this upper end of the channel trend, which is a resistance, all right, for Hang Seng. And the minute it hits it and turn around, all right, you can see the pivot point here. When it turned around, I did a short on Hang Seng, all right, and I did a short using a derivatives called the Hang Seng DLC. So what I did was, because I was bearish, I bought a Hang Seng DLC 480,000 lots, all right, the Hang Seng DLC short at 1.535 on 28 May 2019. All right, so I got it right. All right, so after it hit the top, it was resisted. It came back down, and according to my trade plan, when it hits the support right here, all right, when it hits the support right here and rebounded, on the first rebound, I covered my short. So I bought, all right, 480 lots at 1.535, and I covered my short, all right, on the next day, which is 29th of May, at 1.572. So I took time tidy profits, all right, from this very short position, 1 day duration, and I made $16,700. So I continued to use this trade plan to trade the market or to trade the Hang Seng Index. And so the similar setup happened again. Hang Seng Index rebounded, all right, hit the upper end of this channel trend line. So that's where I did a short of the Hang Seng Index. So this time around, I did not short the Hang Seng using the DLC. I shorted the Hang Seng using the CFD contract, and I made 19,000 Hong Kong dollars, and adding them up, it came to about 20,000 Singapore dollars. I want to show you another example, and this was a big sum that I made using the method that I taught you, and that is how I turned $100,000 into $2 million in 15 months. We know that a lot of people actually lost a lot of money during the great financial crisis. So when I turned $100,000 into $2 million, it became like a headline. A lot of people were asking me, how did I do it? How do I know that the market was about to turn? How do I know the market is going to crash? And I showed them this trade plan. All right, this trade plan is how I projected, all right, that Dow Jones, when it hit this resistance level, it could peak and it would turn down. And if it turns down, all right, and it turned out to be a crash, all right, this is where it will be supported, all right, and that was spot on. Okay, that was spot on. So the question is, how did I created this trade plan? All right, how did I draw these channel lines? So the secret is, this was how I drew the channel lines, all right. So if you look back in history, in the 1990s, all right, in the 1990s, from here, all right, this was where the trend line started. And what I did was really I projected this trend line up to the next swing point to form the channel lines, all right. And when prices hits the top end of the channel line, that's where I turned bearish, but I did not short the market until the market reverses. So when the market reverses, I put a short right here with $100,000 in the CFD, and when the Dow Jones went all the way and hit right at the bottom, which is my target, that $100,000 became $2 million. And after hitting the bottom here, the market never looked back, all right. So this is where the market bottomed out in 2009, and after that turn, all right, we have been on a relentless bull run. We are in the 11-year bull run after the low was established in 2009. I always believe that it is the simple strategy that help us win in this market. So for example, this very simple trade plan that I drew, it was from a couple of swing points. You could see in the 1990s here, I was just connecting all the swing points together to get the bottom. And when I got this trend line drawn from this swing point, what I did was really to project it to the highest swing point up here to get the ultimate high here, which is the great financial peak. And therefore I got it right, the market turned, and that's how the money was made. So when the Dow Jones hit my target level, I started depositing in 2017, all right, $100,000 into the Phillips CFD. And when the great financial crisis finally happened, I started to profit from it. And here is where you could see my daily P&L. And those that are in blacks, all right, are profits, and the one in reds are losses. And you could see my P&L profile, the daily P&L profile. It looks something like that, all right. When I take a profit, it's normally huge. When I cut my losses, it's normally very small. All right, so that is how I turned $100,000 into $2 million. A lot of people ask me how I do it. The only way you could do it is to be able to identify trends, and you have to ride on the trend until it bends. So when you are able to ride the trend until it bends, all right, you can maximize your profit and you can cut your losses early. All right, so that is the trick. All right, you must be able to ride, and the only way to ride gains is to be able to sit on trends or identify trends. Okay, so you could see my P&L profile day to day. So this P&L profile is no duff. All right, it is real, it can be verified, and you could see them day to day. And like I said, the profile has been consistent all the way, all right, until the last day when it became $2 million bucks. Okay, so trust me, all right, the method I teach you is good, it's useful, all right, especially about identifying trends and how to ride on trend until the trend bends. So if you have been following me, you will know that I do a lot of live intraday day trading program for Singapore Stock Exchange and Macquarie. All right, so as a professional trader, I do a lot of short-term trading, medium-term trading, and even very long-term trading. So this is an example of my day trade for China A50, and how I turned or how I made $100,000 of USD between the period of November 2014 to February 2015. And this is the day-to-day profile of my trades, all right, for China A50. All right, so what I'm trying to say here is that if you get the strategy correct, right, whether you are trading short term, even as short as intraday, medium term and long term, you should be able to profit from the market consistently. So what I'm going to show you here is going to be mind-blowing. With all the strategies that I've taught you, you can use it, all right, to create a trade plan. So let me just give you an example of how I created this Dow Jones trade plan and how I've shown this trade plan to a crowd of 400 people. It was 2nd February 2018, and I was running my usual quarterly market outlook in front of a packed capacity crowd of 400 people. So as usual in every market outlook, the crowd will be asking me when this bull run in the Dow Jones will end and how I see the trend of Dow Jones going. My answer has always been the same. My answer has always been, I don't know when the bull run will end. All I know is that I have a trade plan. So similarly, on the 2nd of February, I showed the crowd my trade plan. So this is my trade plan. So what I said was this. I said that you could see now that Dow Jones is on a very well-defined uptrend. All right, and it has been, all right, on the uptrend for a couple of years. But for this trend, all right, that is in blue, all right, it has been on the run for about 3 months. And if the Dow Jones corrects, all right, if the Dow Jones corrects and if it breaks 25,800, all right, it could go to 24,300, and if it breaks below 24,300 into this channel trend, all right, the price will just move along the channel trend. So this is what I predicted as a trade plan. If the Dow Jones breaks the trend line, or if the Dow Jones breaks the uptrend channel lines, particularly the magic figure, the support level at 25,800. So if it breaks 25,800, it will go to 24,300, and if it breaks below 24,300, all right, into the channel, all right, you will move, all right, in a consolidated way within that channel. All right, so let's see whether it really happens. All right, so lo and behold, after the market outlook on the 3rd of February, the Dow Jones broke, and it broke 25,800. Where did it go after that? It went exactly where I predicted, round about 24,300, and it kept bouncing off 24,300. You saw that? It kept bouncing off 24,300, and when it broke below 24,300 into this channel, all right, it just, the price action just traded within the channel line. You saw that? It just traded within the channel line. So can you imagine that, something that was predicted, a trade plan that was formed, created, and, and told to the crowd on how prices will move when it breaks a certain significant level, and that's how it will move, and it turned out exactly according to prediction. Can you believe that? Can you believe that with simple trend trading techniques, you could use it to create a trade plan, and that trade plan can tell you future market direction? Isn't that mind-blowing? So I'm sure by now you'll be curious how I created those trade plan. So let me just give you an animation, all right? So this channel trend line is drawn from the pivot points in the past, all right? So the historical pivot points was used, all right, to draw these channel trend lines. And then Dow Jones, okay, at that point of time was moving along this uptrend. So as long as it was moving along the uptrend, it was well and good. All right, but the minute it breaks, particularly when it breaks the 25,800 mark, all right, it will go to 24,300 right here. All right, and you could see that at 24,300, it kept bouncing off from 24,300 along this upper channel trend line. All right, and as predicted, the minute it breaks into the channel trend line, the prices just move along within the channel trend line. And if you are able to draw trade plans like this, all right, you can profit a lot from the market, because you will know exactly how price will move. You know exactly where the bottom is, where the top is, when the price will start turning, and when you can long the market, when exactly, all right, you can short the markets. So after the price broke and went into the channel trend line, can you imagine, all right, this was predicted in February. Prices broke in February, and the whole trend that was predicted, right? Prices move exactly according to prediction for about 7 months. All right, from about 7 months, it just followed the trade plan that was drawn back then in February. So in the next example, I want to show you the Nasdaq trade plan. We all know by now that the Nasdaq has been the leading index and the best performing index on Wall Street, and if not the best performing index in the world. So this was a trade plan that I published on March 20th. And I said this, I said Nasdaq, a breakdown below 750 is an optimal signal for more price weakness to follow. Nasdaq looks likely to break, all right, and towards its immediate support at 7180, and if this level doesn't hold, all right, it will fall towards 6900. All right, so many people have predicted a correction or crash on Nasdaq, and it never happened. In the course of since 2009, I predicted a couple of Nasdaq correction, and it came through. All right, so this is what happens after the prediction. So remember, I said that watch for the 7510 mark, and when the 7510 mark breaks, all right, it could go to as low as 6900. So did that happen? That happened exactly. All right, so that happened after it broke the 7510 mark. It went south. It hits 6900, and after 6900 it started to rebound up. All right, so this is the animation. All All right, it broke the 7510. It went to 6900, and from 6900 it bounced up, and it continued to follow this trend that I have created, or this trade plan that I've created. So this is another example of how when you create a trade plan, all right, it can predict future prices. All right, so a trade plan, you can use a trade plan, all right, for a long time. It's just not for 1 or 2 days, all right. It's just not a very short-term price action prediction. It can go a long time, all right. So that's how amazing and powerful, all right, trade plan, if you know how to create them, can be. So this was another trade plan that I used to predict the prices of Netflix. So on 25th October 2018, I made some prediction on Netflix on my blog, and this is what I said. All right, I said that Netflix broke below 5 months topping pattern, below the strong support at 310, and that, all right, could see now a projected downside of 225. I say enjoy the ride, made your money, all right. So a lot of people actually follow me in this trade, and a lot of my followers actually make quite a bit of money. All right, so this was the trade plan. See all the lines drawn, all the trend lines drawn from the previous pivot points, and see what happened to Netflix. All right, so Netflix actually followed these lines exactly, all right, and it went down to as low as 230. All right, so at 230, when it bounces off, I knew that it's not going to my 225. So I missed that for about $5, but that's not a lot. So when I followed this new price action, when it bounces off from 230 low, that's where we took our profit and cover our shorts. All right, so see how amazing a trade plan can be, and how much, all right, you could profit from a good trade plan. So this is another example of Hang Seng Index. All right, see what price action can do and how you could predict future prices using price action. So Hang Seng Index, all right, was on a very well-defined uptrend, but I did a trade plan on it, and my trade plan says that okay, Hang Seng was up, but the target, all right, it could peak at 33484. All right, so that's what I said. I said that watch out when it hit 33484, and that's what exactly I said. Could have seen the peak already after hitting 33484. A correction is on the cards, and if it breaks below its support at 31950 and 31550, the break below, all right, could see the Hang Seng Index going towards 29250. All right, so this is where it is. It went up, all right, and I said it's going to break. It broke, all right, and after it broke, all right, it went to 29250. Did that happen? All right, watch what I said also. All right, I said use the word too crowded. So here I'm using volumes. All right, I'm using volumes. What I'm seeing here is that prices, although on the uptrend, everybody got bullish, but the warning sign is that increased volume churning. So it's a lot of activities here, but the prices are failing to make new highs, and also it hits the target on my channel trend line, the upper target on my channel trend lines, and therefore I got bearish at the top. All right, when nobody was getting bearish, I got bearish. All right, so that's how I synergize between price and volumes. And to a lot of people it was bullish, but to me it was a bearish signal, and that was exactly what happens. All right, it hits the top here. All right, Hang Seng hits the top here as predicted, went all the way to 29250 at the bottom, and it rebounded. All right, let me try to wrap things up. All right, so what is in common? All right, so the key objective to all trading methods is to be able to find where the floor or where the ceiling is. All right, so the floor is the support and the ceiling is the resistance. All right, the minute you hit a support support, right? If you know where the support is, or you can find where the support is, all right, you will be able to buy low and sell high, and you are able to find where the resistance is, you'll be able to sell high and buy low. So that is the key to winning in the market. All right, you must be able to find support, resistance. So identifying support and resistance is the key to winning. Why? Because trader can profit from buying near support and selling near resistance, and vice versa. And when support and resistance are breached, all right, trader can now assume prices will now be trading in a different zone. All right, if the breakdown happens, they can cut their loss quickly, and then they can go ahead to identify new support and resistance levels in the new zone. All right, there are many ways. All right, I said again. All right, there are many ways to identify support and resistance. And let me just show you, all right, support and resistance are just not, it just not works, all right, with your trend line, with your natural support resistance or horizontal support resistance, all right. Even in indicators like Fibonacci, all right, people use it to find support resistance. So Fibonacci has got a couple of levels. If you know, all right, Fibonacci is a retracement indicator. It's good to know where retracement is. And therefore, a lot of this support and resistance are already a known formula. And when prices hit those known levels, you would expect it to rebound. And the minute you rebound, you know when prices rebound, the minute prices rebound, you will know that a floor or support has been established, and then you look forward again, all right, to the next known levels. All right, so the minute it turns, all right, that is where, all right, you know that is resisted, and you could be either be taking profit or be selling. All right, so even in indicators, you find a lot of people try use indicator to find support and resistance. So another example is Bollinger Bands. All right, it has got like a channel trends, upper channel trends and lower channel trend. So when prices hits the upper trend line, it tends to be resisted and to back off, and when it dips, all right, it will come to the next support level, which is the lower bounds of the Bollinger Bands. All right, and so the lower bounds of the Bollinger Bands is the support, and the upper bounds of it is the resistance. So a lot of people just trade, look at this Bollinger Band support and resistance and just trade within the zones. Right. Another way of finding support resistance, all right, is through trend lines. And if you are able, all right, to draw a channel trends, all right, using pivot points or what I call swing points, you'll be able to know exactly when support and resistance is, and you were able to know, all right, many times you're able to know when the market will finally peak. All right, so support and resistance, you can know it through many ways. So this is one of the way that you could find also support and resistance. So moving averages has been a very popular strategy to find support and resistance amongst traders. And the two moving averages that's very popular is 50-day moving average and 200-day moving average. And most times, the short to medium term trader will use 50 days moving average as a guide. And if the prices breaks the 50-day convincingly, a lot of traders will expect the price now to move towards the 200-day moving average. So that is how traders will see and use these moving averages. After 30 years of trading in the market, I know that there are only a few strategies that can correctly identify highly probable support and resistance with high profit potential. All right, there are many methods out there that helps you to identify support and resistance, but let me tell you, a lot of them don't work. Right? Ultimately, the secret to successful trading is the ability to create a price action trade plan based on support resistance. So what can a trade plan do for you? You have seen a couple of examples, right? Especially in the Dow Jones trade plan, the Nasdaq trade plan, the Hang Seng trade plan that I've shown you. A trade plan gives you a helicopter view of the market. It gives you a conviction where prices are heading in the short term, in the medium term, in the long term. And therefore, with a trade plan, you actually trade less and make more money. A trade plan tells you when to enter the market, when to exit the market, and what is your risk. If you fail to plan, you are planning to fail. So what's next? I hope this 3-part video series have provided you with valuable insights into my 30 years of trading experience, and you would have a good idea of what works in the market today and what doesn't. I've been trading for the last 30 years, and as I have shared in my first video, I really paid the price learning from my mistake and by trial and error. If you would like to shortcut your learning curve, to learn more about my price action trading strategy and how to use this method I've taught in this video to create trade plans, identify trading opportunity, I want to invite you to my up and coming price action trading course, which is happening soon. So what does the program include? The first thing that you sign up is you will get 5 sessions of live classroom coaching lasting about 15 hours. So a common question I get about the course is, why is it so long? Why is it lasting about 3 weeks? And my answer is, this course is special because when you come for this course, I run a portfolio with you and I create a portfolio for you. All right, I will stock pick for you. So those stocks that needs to be on your watch list. So in these 3 weeks, because we need to see how this stock perform, right, on the first day they come for the course until when the stock ends. So if I run the course with you just over the weekend, we are not going to see results. We're not going to see how our portfolio performs. So I need time, and therefore I'm running this course over a 3 weeks period. So what does the course cover? The professional trading edge, price action strategy, price volume and trend analysis, support and resistance, multi-time frame analysis, professional chart analysis, building a trade plan, trade preparation and management, a precise entry and exit strategy, portfolio construction, trading psychology, money and risk management. And that is easily worth $4,800, a course that I have conducted over the last 12 years. What's more, this course is special because it includes a live trading session. So the duration is 3 weeks, and including the live trading session, we will have 6 sessions altogether. So the 5 sessions that we have, I will prepare you for the last day of the live trading session, and that's where we will trade, or you will trade together with me, the Hang Seng Index, the Simsky and the China A50 during the Asia trading hour from 9 to 12. And in this hour, we will also be trading some stocks live. The positive feedback that I got about this live trading session over the last 12 years has been, that this live session is good because it really puts into practice what they have learned over the last 3 weeks. I've conducted singular live trading session in the past, and a lot of people were paid about $700 to $800 just to attend the live trading session. So this live trading session is really worth your while. So another very positive aspect of this course is that you get to copy my current watch list. I gather stock ideas over a long period of time from research report and many other sources. you get the privilege to copy them. So in this portfolio, there are thematic plays, single stock trade ideas, and other trading ideas that could stay relevant for a long time. You will also be getting a 3-month institutional grade charting platform, and this trading workshop is something that I have been using for the last 15 years. Data and news from Thomson Reuters. Download my trade plan after each session. But personally, I think that the most valuable thing is that you get to join my live stock chat group on the Telegram. So in this live chat group, I discuss and share with you my trading ideas, live market outlook every day, live broadcasts of market news, and also my personally curated stock pick from professional research report, real-time updates, and my own personal trading idea and insight. I keep in touch with you every day. So another thing you will get in this program is the 3 months access to RHO key index level. All right, so what is this? This is my intraday index trading signal. So every day I make predictions on major indices on the market, like the Hang Seng, China A50, Simski, and during the night time, Dow Jones, S&P, and Nasdaq. And traders get alerted when the index hits my level. All right, so they get to buy and sell, and they get to profit from the intraday signals. All right, so this is intraday trading signals, a very unique signals that as far as I know, all right, in this part of the world, I'm the only one providing it. All right, so during the course, you will learn how to make this prediction every day. So this is a very like a proprietary skill of my own, and I'll be teaching you. I'll be showing you essentially what the black box is all about, how I call the high and low every day. All right, and you will get to learn it. So in summary, this is what you get. 5 sessions of live classroom coaching session lasting 15 hours. And that's worth $4,800. 1 live trading session, and that is worth $780. Copy my current watch list, I believe worth about $5,000. Institutional grade charting platform for 3 months, $600. And like I said, one of the most valuable thing you get is my private Telegram chat group for 3 months, and that is worth about $900. And RHO key levels for 3 months, worth about $299, and to add them all up together, it is $12,378. That is the total value. So today I'm sure that if you are following your social media, there will be a lot of people out there that is willing to teach you trading for a price. So how do I stand out among all these trainers? So first of all, I want to say that I'm a trainer among professional traders. So I've been an accredited trainer for Singapore Stock Exchange Academy for the last 12 years. And I've been called upon to teach professional traders. So who are the professional traders in Singapore? They are the remisers, the stockbrokers, the prop traders, all right, the full-time traders that trades in the broking house. And this is a job that a lot of people cannot do, because these traders by themselves, they are professional traders. Well, you need to teach them some advanced stuff, all right, before you could stand in front of that class. So I believe a lot of trainers cannot do that, all right, because they do not have the trading experience to engage audience like this. So this is a picture about me called upon to teach RHB Dual License Dealer Trading Program, and this is a program sponsored by Bursa Malaysia. These are all full-time traders, and a lot of these people there, you know, perhaps even older and more experienced than me, and I was teaching them about 8 years ago. Can you believe that? And in 2015, you know, SGX, right, commissioned me to go around the broking houses to teach full-time traders and remisers. All right, so this is the picture of me teaching a bunch of close to 37 remisers from Phillips Securities. All right, so this is a 7-day training program, and guess what I did with these guys? All right, for the 7 day, these guys are all veteran. They know, a lot of them know the theory of trading more than me. So what I did with them is that during the 7 days, I did a lot of live trading with them. I showed them how I could make money intraday. I showed them how I could make money short term and even in the longer term. And then I was given the task to go to DBS Vickers, all right, to teach the remisers and full-time traders. Well, and this is a guy that followed my live trade every day, and also especially during the live trading session. And he said that he made enough money to cover his course fees by 25 times. Can you imagine? All right, he's paying a course fee of $4,000, and it's 4,000 times 25. So I was also given a job to teach the OCBC full-time traders and remisers. You could see a big bunch of them out there. And amongst them, all right, there was a special guest or a special student that I had. All right, so after that course with the OCBC, Albert Fong, all right, Albert Fong is special because he was the president of Singapore Remiser Association for 20 years before he retired. So he was amongst the class, the OCBC class, and after that course, he kindly wrote to me an email, and he said, "Thank you for your enlightening and stimulating presentation during the Advanced Technical Traders Program. The topic was timely, and the live minute-to-minute trading session that you demonstrated was so engaging. It was a memorable experience." All right, so Albert Fong, a veteran trader, and many people consider him the chief among traders. All right, and he said that he was so intrigued, all right, by my live minute-to-minute trading, and that is the live trading that I talk about. It was a memorable experience for him, and he said that I found your practical and proven trading technique especially intriguing. He said, "I feel now more confidence working with the new method in identify trading trends now than I did before, all right, your presentation." So what Albert is saying is that, for the past 20 years, he had his own trading strategy. But after attending this course, right, he feels more confident in using the trend trading method that I taught him. All right, and above all, right, he said that my post-trading calls, all right, were helpful, all right, to him, and he was grateful. All right, so what was a post-trading call? It was the chat group that I put him on, the live chat group I put him on after the course. So many students who attended my course became full-time trader after that. And one example is Ong Kai Ming. So Ong Kai Ming attended my course in 2014. All right, and after that, right, he was so good and so popular that he was a guest speaker in Singapore's radio, the financial radio, 93.8, and in the year 2019, all right, for the whole year of 2019, all right, he was giving his weekly market outlook on the radio. And today he runs his own trading company, and he is the founder of Singapore Index Trading Institute. All right, so these are the past course graduates, this is some of the testimonials here. All right, let me read from Aaron James. All right, and Aaron said this. Right, he said, "What I appreciate is that after what you taught us, you're willing to guide us in our journey as traders. So really, I handhold you on my Telegram live chat group." And he said, "What I really do appreciate is your guidance, and hopefully I can share the knowledge with people I care someday." All right, so this is Mutu. Mutu said that before he came for the course, for 4 months he was losing money. All right, and after the course he felt that he found the right formula. All right, this is Shang Wen, and Shang Wen said that you're only one I knew is worthy to pay for continuity into paid courses. All right, and indeed I did not disappoint him. All right, so Shang Wen has attended many courses, both paid and free, but he was disappointed with almost every one of them. All right, and this is what David said. All right, David Sia, he said that watching you demonstrate live trading to us, this is something that you cannot get anywhere in Singapore. And this is what Jim said. All right, so Jim said, prior to your class, I've attended numerous courses, paid and free. None of the class came as close as what you taught. So this is Andrew, and Andrew said, I've already improved my hit rate by over 50% and recovered my course fees. So by the end of the course, Andrew already recovered his course fees. But see what Andrew said this here. All right, he said in his feedback form to me. All right, he said that, and Robin helps me to trade from the big picture perspective. All right, through the trade plan that I help him or taught him how to create. All right, now Andrew doesn't trade a lot every day. He will trade less and make more. All right, and he said, I'm learning to win off from scalping and spotting the big profit. All right, so he doesn't do a lot of short-term trading. All right, because now he learns how to understand how to trade for the big picture, and to, like I said, to be trading less and making more. Okay, so that is Andrew. All right, so this is Dr. Lee, and Dr. Lee, just wanted to learn a skill to manage his own money. All right, he has been attending so many courses, but they have all failed him. And after the course, right, he felt that this was the right course for him, and he said this. See what he said? He said, this is the course that will end all courses. But to recap again, this is the total value of the course, and that is $12,378. So let me ask you an honest question. It is something that is personal. It's something that only you can answer to yourself. Would it be worth it? If coming for the course, you will learn exactly when to enter and exit each trade. And how much will you save by avoiding the pain of holding on to a dead stock? Would it be worth it? If you can ride on the next 10 bagger like Bitcoins in March 2020, would it be worth it? If you can spot the next market crash and know exactly when to start shorting the market. So the good news is, I will not be charging you $12,378. Instead, I will only be charging you $4,800. So this is another good news for those of you who want to sign up. So if you sign up before 14 April, I will give you an additional bonus, which is 15 of my most recent trades as case study, so that you can dig into my mind and learn my thought process and how I make these trades. All right, so I believe each case study is easily worth $100, and that will mean that this case study is worth a total of $1,005. So including this 15 trade plan case study, the value of the course will go up to $13,878. But I will keep your investment in this course to $4,800 if you sign up before 14 April. Right, before I end with this video today, this is the best news I have for you. Because you have watched this 3-part series video, I will be giving you an additional $1,000 off. So that brings your total investment down to $3,800 for this program. Remember, you will only get the 15 case studies only before 14 April. So if you are interested to learn more and sign up, go to tradingkungfu.com/PTSCO. I hope to see you at the course.